What wealth building individuals are looking for they're looking for a roadmap, a blueprint. And what we offer in the book is a blueprint of the things you need to consider when building a hard asset empire, Alan.
High-income professionals are excellent at earning, but very few understand how to architect wealth that outlives them. In the Blueprint for Generational Wealth, discover the Hard Asset Empire Blueprint and the principles behind lasting financial resilience. Welcome to Streams to Impact, brought to you by Steed Talker Capital. I'm your host, Dr. Allen. This show is designed for accomplished professionals and entrepreneurs who have mastered their craft, built meaningful income, and are not looking for another job. You're looking for alignment, you're looking for structure, you're looking for ways to put your capital to work so that it compounds intelligently and supports the life you actually want to live. Because at a certain level of success, the game changes. It's no longer about how much you earn, but it's about how wisely you allocate, and it's about resilience, and it's about legacy. If you have ever wondered whether your portfolio is structured for true durability, if you've asked yourself whether your current strategy will serve not just you, but the next generation, then you're exactly where you need to be, because that is what we explore here on Streams to Impact. If today's conversation resonates, I'd like to extend a more personal invitation, and you can join me for a Path to Prosperity call. It's just 15 minutes of focused alignment where we examine your current financial landscape and clarify what genuine prosperity looks like for you. And we identify the first deliberate steps towards securing it. This is one-on-one conversation, not a sales presentation. It's a quiet space for thoughtful professionals to think out loud with someone who has walked the path and to leave with at least one insight worth the quarter hour invested. So to reserve your time, visit www.steedtalker.com. Hope to see you there. What does it take to build wealth that doesn't just perform well in one market cycle, but endures across generations? Our guest today, Ben Reinberg, is the CEO of Alliance Consolidated Group of Companies. Over the course of his career, he has facilitated billions of dollars in transactions across diverse asset classes, developing a reputation for discipline, strategy, structured foresight, and strategic precision. His historical internal rate of return of 28% is not the result of speculation. It is the outcome of intentional allocation, hard asset focus, and a deeply engineered approach to risk and resilience. So welcome, Ben. We are so glad that you are with us today. So you chose this moment amid economic instability, inflation pressure, and rapid market shifts to bring your book, Hard Assets and Hard Money for Hard Times, to the public. So on a personal level, what convinced you that the timing was critical, and what do you most want readers to act on immediately after they finish reading your book?
Well, I want to inspire people to know that they could build wealth like I have. And Alan, thank you so much for having me on your show. When I was a younger man growing up in Chicago, I saw that the key to build wealth was not hoarding cash, it was investing in hard assets. And for me, the reality was if I could learn how to invest in hard assets like commercial real estate, like some of the wealthiest billionaire families in Chicago, that's how I was going to build wealth. Because being rich is about what you own today. I was looking to have a sustainable career to learn how to build an empire and create for generations after me.
Well, you have said that hard assets are what real wealth is built on. So in today's landscape of rising debt level, currency concerns, shifting monetary policy, what structural changes are pushing tangible assets back to the forefront? I don't think they've ever been not in the forefront myself. But anyway, what is it that serious wealth building individuals are looking for?
Well, what wealth building individuals are looking for are they're looking for a roadmap, a blueprint. And what we offer in the book is a blueprint of the things you need to consider when building a hard asset empire, Alan. I felt it was extremely important that we create a book that's evergreen, where you can take it off the shelf, look at the blueprint, and say, where do I need to tweak or amend as I grow? And where can I pass on to future generations? That's what I love about the book. The book is evergreen. It's not like your typical book where you read the book and then maybe a month you remember what was in the book and then you don't apply it. This is a book about war stories I've been through, how to apply it, and the blueprint is free for your audience. If they go to benreinberg.com, they can download it for free and see exactly um, what's happening.
Well, speaking of the blueprint, Ben, can you just kind of walk us through what are the core pillars and how does it help high income professionals in particular move from reactive investing, and which I mean, most of the people I work with who are high income are are way over saturated in their portfolios in public markets. So how do they move from that to intentional wealth building through hard assets?
Well, what they're going to do is they're looking to build wealth through hard assets, through cash flow, through tax benefits. And the blueprint's going to take you through the four pillars. It's going to show you about how to build a foundation. It's going to show you how to protect, grow, scale, and defend your assets. That's the whole purpose of the blueprint. And by building a hard asset empire, what will allow you to is produce cash flow, to be able to grow assets that are sustainable through any type of environment. And so for me, it was the way for me to create wealth. And I looked at it and I said, well, what did we do throughout our career? What have other colleagues of ours done? And if you look at it, every institution, every successful family and sovereign fund is fleeting towards hard assets right now. That tells you everything you need to know.
So you say they're moving towards that. Don't generally they most, or well, I guess on average, don't the wealthy families hold, oh, I don't know, anywhere from 60% of their portfolios in hard assets, generally speaking? Uh, this isn't really a new trend, is it?
No, it's not a new trend, but in this environment, I think is basically you could see they're allocating more money into hard assets, and that's why I meant that they're fleeting to it. Is they're saying, you know what, we're going to allocate even more money into hard assets compared to what we normally do in our allocations. That's what I mean by it.
Okay. I'm not sure that everybody knows exactly what you're talking about when you're talking about hard assets and hard money. So can you define that for us?
Sure. Hard assets are tangible, durable assets that produce cash flow. That's what a hard asset is, like commercial real estate, my expertise. And that's what I love. That's what I'm passionate about. When it comes to hard money, it means investing money into hard assets.
Okay.
It's money that has been invested into tangible, durable assets that produce cash flow, that can deal with different cycles throughout different recessions and allow you to have the ability to hold to be able to generate wealth.
So how is it that these hard assets actually help to preserve capital through recessionary, through depressions, through currency devaluations, and wars and whatever have you that disrupts economies?
Well, if you take different niches, you look at one of our niches, which is medical office. Well, Alan, the human body is never going out of style. You still need to go to the doctor. You still need physician services. We invest in all different type of asset classes within the medical industry. If you're looking at multifamily, people need a place to live and rent. So there's different hard asset classes, especially in commercial real estate, that produce cash flow because they deal with economic stability and what people need in order to live and sustain their lives. And so the cash flow is produced through those services that are within the building or individuals that need a place to stay or live. Same thing with industrial. You still need distribution centers. You still need places to manufacture in the United States. So at the end of the day, people need a home to run their businesses or their lives. And because of that, hard assets produce cash flow. It's why they're financeable and it's why they're attractive.
Well, Ben, you have facilitated billions in transactions
Mhm.
across a number of different asset classes. And so when you look back across those cycles, what patterns separate the investors who build wealth through these ups and downs from those investors who just merely participate in market cycles, hoping that they can judge the market cycles correctly?
Can you repeat the question again?
How, as you look back over your career and working with a vast number of different investors,
Mhm.
what separates those who have learned how to really develop generational wealth from those who are just merely trying to time the market?
Well, I mean, basically, those investors have learned that there's tremendous tax benefits in investing in hard assets. They've also learned that there's a significant demand for those type of services that occupy in hard assets as well. And so at the end of the day, it becomes a comfort level for these investors knowing that they can allocate capital that can produce cash flow, great tax benefits, and have appreciation in the properties that they own. So at the end of the day, it produces great wealth because you could shelter your income in commercial real estate. We do cost segregation studies that allow us to really be able to benefit our investors. And so investors that are out there that are investing, the reason why they go towards hard assets because they see these benefits of cash flow. They see that it is a marathon business. They see that owning assets for a long period of time can produce tremendous amount of wealth. And it's been proven throughout the test of time.
Absolutely. Well, you emphasize that building wealth through hard assets is accessible to anyone who is willing to be properly guided. And for the professionals that are listening, these are our audience are really high income professionals. How do you help them really change their comfort zone because they've been so accustomed, they're working with advisors who really don't know anything but public markets, and so that's where the bulk of their assets are at. So, how do you help these individuals transition from their comfort zones in public markets to looking at these private assets that they're hard assets, but they're also private assets. So it's really a whole uh, different philosophy, a whole different way of investing. And even though for you and me, it seems makes so much sense and it seems so stable and it seems like the way to go, for people who are new to that, it's really uncomfortable. How do you help them transition?
Well, we make it comfortable through education, expressing the benefits. Uh, a lot of people see the hard work that goes in, and communicating with your investors is really the key to getting people comfortable. You got to tell them the good and the bad. Not every deal is going to be perfect, and so for us, Alan, at the end of the day, it's communication, it's being present, it's being transparent, having integrity, consistency, and expertise in what you're doing. And most people understand investing in real estate, especially commercial real estate. And so when you have a track record like we do at Alliance, and your listeners can go to Alliance CGC and see how to invest with us, at the end of the day, for them, it's all about communication and education and building trust. And then we prove it once you start investing with us.
Yeah. Yeah, that's what I have discovered, that once people have made that first initial investment, it's much easier from there on out.
Right.
But it's that first step into unfamiliar territory that is often most challenging. So you had mentioned that that medical office is your um, area where you focus the most, but you've also done
Mm-hmm.
multifamily,
Mm-hmm.
um, industrial, and other kinds of hard assets. Uh, what is it about medical office, other than the fact that, you know, people are always going to need medical services, and it's not a kind of service that is ever going to be able to be dealt with online, you have to see your physician. So other than that, what is it about that class that has been so appealing to you?
Well, the human body is never going out of style. And no matter whoever, you and your family always goes to use medical services, an array of different services. The baby boomers, which has grown significantly, are using more and more medical services. So the niches are growing. We have more disease going on in this country than we ever had. And so people need medical services. And in order to have medical services, you need facilities that can provide it. Telehealth is not going to solve you when you need a gastro procedure, you need dermatology or surgery, or you need pediatric services or dialysis. The list goes on and on. Mm-hmm. And so as the human body is the foundation, it provides a great asset class to make a significant return for your investors along with tax benefits.
In terms of medical offices, in terms of the leases that underride that, I suppose you're finding all kinds of leases from temporary lease to long-term lease to triple net. What's the most predominant kind of lease that underlies the?
Well, most medical properties are net lease. They could be absolute net lease, triple net, depending on what the landlord or the tenant is responsible for individually. But at the end of the day, generally speaking, they're net leases, and the tenants are investing significant money on a frequent basis within these properties.
And I'm wondering also if that doesn't provide for earlier cash flow on new acquisitions. Does that? Do you find that is the case with medical office as well?
Yes, I mean, I find that, at the end of the day, medical office provides stability and consistency. Mm-hmm. And that's why we like investing in it, because we have a high retention rate with our tenants, mm-hmm. and they build deep roots within these properties.
Yeah. Well, that all makes sense to me. So we've had a very timely conversation today. And we explored what it truly means to build wealth that endures, not wealth that performs well in just one cycle, and not wealth that depends on perfect timing, but wealth that is structured, durable, and resilient. So we discussed why this moment in economic history demands clarity. Inflationary pressure, currency instability, and rising debt levels, and rapid policy shifts are temporarily in the headlines, but they always come and go. So they are structural realities, and as Ben has shared, hard assets are not a trend, and they are indeed a solid foundation. So we examined the hard asset empire blueprint, a framework that's designed to move investors from reactive decision-making into architected wealth creation. And so we clarified what hard money means in a world of financial engineering and why tangible assets play such a crucial role in protecting our capital. So if this conversation resonates, you can get in touch with Ben and get educated, and you can get his book, Hard Assets and Hard Money for Hard Times. You can find that at Amazon, or you can go through most of your local bookstores. In it, he breaks down how real wealth is built through hard assets and how investors can begin structuring their portfolios for durability. So we thank you so much for being with us today.
Thank you.
And you can also get the blueprint for free, as Ben has mentioned earlier, and his website is www.benreinberg.com. That's www.benreinberg.com. So thanks for being with us today. We look forward to being with you in our next episode.
Thank you, Alan. I appreciate the time.
Thank you for tuning into Streams to Impact, brought to you by Steed Talker Capital, a company empowering passionate professionals like you to develop multiple streams of passive income built on solid passive real estate investments. As a significant part of our endeavors to make a cosmic and meaningful impact for this world, Steed Talker Capital contributes significant portions of our profits to activities and organizations committed to better understanding the equine. These endeavors attempt to enhance the treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures great and small flourish abundantly. If you are ready to learn how our passive investors have earned an average 33% annual return on their investments, schedule your complimentary passive income to Prideful Impact consultation. Obviously, we cannot continue indefinitely to offer these valuable consultations for free, so grab your passive income to Prideful Impact consultation while you still can. Go to steedtalker.com/passive